Hi guys, welcome back to my channel. Today I'm going to be talking about 10 things that you should know before you start working in public accounting. If you want to see more of these videos, make sure you give it a thumbs up and don't forget to hit subscribe. So without further ado, let's get started. So the very first thing I want to talk about is the hierarchy. I just wanted to show you a clear picture of what the steps are to get to partner. So we start with the interns, the associate or staff, then we get to the senior, the manager, the senior manager, director, senior director, and then finally partner. If you're watching this video, you're probably just entering into the public accounting space, either as an intern or as an associate. So I'm going to focus on those two. So as an intern, you probably think of people doing a lot of the errands, so doing coffee runs or doing the copies of papers. However, I would say that interns actually get treated the best out of all the other groups in the hierarchy. The reason why I say that is because a lot of the time, a lot of money is spent to acquire new talent in the public accounting space. My internship experience was one of the best professional experiences I had. You first get paid hourly, most likely get paid overtime, which full-time employees do not because they're salary-based. And like I said, this is really so that they can retain you so that you can become a full-time employee and start working there full-time in the future. So in the past, a lot of the time, associates were the ones doing the prep work. They were the ones that, for instance, in tax, were preparing the tax returns from scratch. However, now that there are teams that are overseas, they end up doing a lot of that instead. So these two positions are something that you'll be really familiar with if you're just starting off. If you have any questions regarding that, leave it down below. And then lastly, I do want to talk about the partner. This is a little different from other companies, like corporate companies, because most of the public accounting firms are structured as a partnership, an LLC, LLP. Because they are structured that way, they actually have ownership, like a piece of the company. In the triangle, the reason why it's shaped as a triangle is because a lot of the times people decide that they don't want to make partner. So it's completely up to you whether or not you want that in your career. But that is something that you want to consider as you're working in public accounting. Number 2 is time charging. So this is very typical for service companies. I know law firms do this, and so do public accounting firms. So in public accounting, we pretty much log what we do each day in increments of say 5 to 10 minutes. That is something that you kind of have to get used to. The reason why they do that is so that they can bill those clients accordingly based on what you charge that day. So for instance, if I'm working 5 hours on one client and 2 hours on another client, then I have 7 hours of client work, and that will be billed to the client accordingly. You're not just going in, doing your work and leaving. You actually have to have good record keeping, either by writing it down or having a software do it for you. That also means that when you are not working, say you take a 15-minute break, that time is not going to be charged to a client, so you have to charge it to a non-chargeable code. Number 3 is utilization. So I talked about this in a few of my other videos, but I'm going to explain it a little bit more in details in this video. Utilization is a metric, and is a metric for people that are within the company. Say a standard work week is 40 hours, then you have a bunch of client work, and then there's also some downtime too, especially during non-busy seasons. Say you work 10 hours on the client and it's a 40-hour work week, then you're only 25% utilized. So you take the number of chargeable hours and you divide it by the standard work week and you get the percentage. You are only going to be 25% utilized. That may seem low, but sometimes when it's not busy, that might be normal, and that might be very rare within the whole year, but sometimes it does happen. Utilization percentage is used as a metric for your annual performance, most likely. It is also used to compare with other peers in your group. So for instance, in a senior group, you will be compared with other seniors in the area. I remember when I was working in public accounting that they actually sent out a spreadsheet each week of where you stood among your peers. Now, I feel like that wasn't necessarily the best way to go about it, but you would be able to see that one person's 100% utilized and another person's 50% utilized. So they use that also to balance the workload. It is used also to see who needs more client work and who does not. Number 4 is that you will be juggling a lot. Now, as a first year associate, not so much as an intern, you will definitely have a lot on your plate, especially as you get the hang of things. So you need to learn how to manage your workload, and you also need to communicate whether or not to your team you could take on work or not. Now, I will say that especially if you're working at a company that has a lot of smaller clients, then you will be picking things up, putting them down, and that's kind of normal, especially when there are things that take different priorities. So just be aware that there are days where you go in and you're only working on one client, but then there's also days where you have multiple clients a day, you have meetings, presentations, you have trainings, and so your day is never going to be the same. I like the days where I had to work on only one client and have maybe 1 or 2 meetings, but that wasn't what it was like every day. So just keep in mind that practicing your management skills of your workload and your time is really important so that it will be great when you start off working in public accounting. Number 5 is that there is scheduling. So each week you would have a scheduling meeting. Sometimes you will have a dedicated scheduler, so someone who's hired to schedule and manage everyone's engagements. So when I was working in public accounting, I had a scheduler in both firms that I worked at. Their job was really to make sure that everyone's workload was manageable, in quotes, manageable in public accounting terms, and also that there was a lot of people that were, focused on client work versus just doing nothing. So I do want to say that the scheduler's job is that they are trying their best to make sure that you have work, but when it comes to it, that you don't have too much work. Whether or not that happens in reality, that's a different story, but their main objective is to really make sure that they spread the workload evenly. The scheduler really wants to make sure that everyone is utilized, which is a term that's used in public accounting, that they're working on clients and that they're moving things forward. Number 6 is that there are mid-reviews and annual reviews. People can give you feedback, and although the feedback is supposed to be like right after an engagement, what happens most of the time is that everyone leaves it to the very end. The rating system, it really depends on each company, but most public accounting firms have a standardized way of how to score you on how you did that year. And so that's something that's helpful because as someone that's receiving the feedback, you know what to work on, and you also give feedback to people that you've worked with as well, whether it's downward or upward feedback. This is really helpful because it is a systematic way of receiving feedback that you may not otherwise get. So that's something that's super important, and hopefully that's something that you guys receive in the future. Promotions, at least from the associate to senior levels, about 2 to 3 years, and then from senior to managers another 2 to 3 years. I've seen people get promoted quicker than that, generally on average 2 to 3 that I've personally seen. Now, I will say that promotions are based on your review, of course, and it's also based on the people that are pretty much weighing in on your promotion, and that happens in the upper level. So as a manager, senior manager, director, senior director, and partners, they all have a say pretty much on whether or not you should get promoted. Your coach, for instance, will be the one that represents you to see whether or not you should get promoted. So when you do want a promotion, vocalize that and tell your coach 1 or 2 years in advance what your plan is on getting promoted so that they're aware too. They may not push a promotion if you never vocalize that you want a promotion. Number 7 is teamwork. So I know in school you may have a lot of projects. Sometimes you think it's useless and you would rather do it alone. But I think teamwork actually prepares you for the real world when you go and work. So for instance, when you're working, you have to work in teams because in public accounting, there are different levels of review. So if there's a mistake on the bottom level, it's caught in the second level. The only time where possibly you won't see that is in very small accounting firms. When we're talking about the large accounting firms, you definitely will see that there are multiple layers of review right when we plan for the engagement to the very end when it's delivered to the clients. So that is something that you have to keep in mind, that teamwork is super important and almost inevitable. Next, we're going to be talking about coaching and development. So there are coaches that you're assigned, and if you don't like your coach and after you talk with them for a couple of times, you could request for it to be switched. I personally requested that it be switched to certain coaches when I knew like which coaches would really help me in my career, because not all coaches are the same, especially if one coach is on a completely different team and it doesn't really relate to what you do on a day-to-day, then request that it be changed. I would say maybe not as an intern, but definitely as an associate. Number 9 is presenting. Again, something that we do a lot in school, but it does also prepare you for the real world. Practicing presenting as if you're presenting to partners is so important, because then that way with the practice you'll be less nervous when you do it in the real world. So I presented a lot. So I would present first by teaching trainings for interns, then associates, then it became my colleagues, and then it became with partners. And then eventually I had to present in front of the whole tax department in my old companies. So this is a skill that is super important, and you definitely want to hone this skill now. I will say as an intern, I also had to present in front of, I would say, management on a tax topic, so it was a technical topic. Number 10 is busy season. I made a full-on video for this, a lot of videos actually on this topic. Basically what busy season is within a year there are months that are super busy where you will be working overtime, and it's almost inevitable. The public accounting year is pretty much cyclical, so you'll have very high points where you're working a lot of hours and it'll go back down. But I will say, no matter what, the standard is always a 40-hour work week. So at the end of the day, although it might not be as busy, it's not that you're working less hours on the down season. So keep that in mind. You know, a lot of time goes into public accounting, working in this field. In the public accounting space, it is almost rare to just have a standard 9-to-5 job throughout the whole year. Although I have seen it on certain groups in public accounting, I personally have not experienced it. Also, during busy seasons, you may not be able to take vacations during that time frame. And there's also companies that have a policy, say you leave during busy season, then they will not pay your PTO that has accrued if you leave during those times. So when it comes to leaving during busy season or taking vacations, know that those are time blocked so that you really can't do that. I will say that there are exceptions, of course, where you can take off during busy season, but that would have to be communicated way in advance. And also you may be able to do that if it's like a family emergency, and of course those are never planned, so then those are also exceptions to this rule. Now, I will say that this is something that's super important and should definitely be talked about in all accounting classes, because a lot of the times people don't know that this is the standard at times in the public accounting space. So that concludes this video. I hope you guys thought this was helpful. That was 10 things that you should know before working in public accounting. If you want to see more of these videos, make sure you hit the like button and don't forget to hit subscribe. I'll catch you guys in the next one. Bye!